Every time you pay an insurance premium, your money begins making someone else rich. Not in the way most people think. Because the moment that payment leaves your bank account, it starts flowing into something bigger, much bigger. A financial machine that quietly turns millions of small payments into billions of dollars. And almost nobody paying into that system ever realizes they're part of it. You pay for protection. Your money sits in a pool. And if something bad happens, a crash, a storm, a medical emergency, the insurance company pays you money exactly when you need it. Most people imagine insurance this way. Now imagine paying car insurance every month, $100, maybe $200, month after month, year after year. 5 years go by, 10 years go by. Maybe nothing ever happens. No accident, no claim. Your money accumulating over time in the hands of the insurance company, waiting for the day something goes wrong. But that picture misses something important. Insurance companies collect money today, and what they are really buying is time. Many claims will not be paid for years, sometimes decades. Think about life insurance. Someone might start paying premiums in their 30s and keep paying for 30 or 40 years. During that entire time, the insurance company is holding that money. Not one payment, millions of them, from drivers, homeowners, families, businesses. Small payments arriving every day. Your money, stacking up month after month, year after year. And during all that time, that money is sitting with the insurance company, waiting. And this is just the tip of the iceberg. Because insurance companies do not just make money when you do not file a claim. Statistically, most people never will. They know it. Which means for millions of people like you and me, the insurance company simply keeps the premiums. But even when claims eventually happen, that money has not been sitting still. Insurance companies invest it. Stocks, bonds, real estate. Entire portfolios built from insurance payments, office towers, government debt, shares in global companies. And those investments can sit there for years, compounding, growing, multiplying. Think about that for a moment. They win because most people never file a claim. And they win again. Because while your money sits inside their system, it is being multiplied. While your bank account keeps getting smaller. And that is when the real pattern appears. Every insurance payment feeds the same machine, one that turns ordinary dollars into billions. And once that machine grows large enough, something strange happens. Insurance companies stop behaving like insurers. They start behaving like investment funds. Because when you are sitting on billions of dollars, you do not just insure risk, you shape markets. Some of the largest insurance firms now manage investment portfolios worth hundreds of billions of dollars. In some cases, more than $1 trillion. Capital powerful enough to move markets, large enough to rival the economies of entire countries, large enough to fund wars. Money at that scale does not sit quietly inside a vault. It moves through the global financial system, funding corporate debt, financing infrastructure, buying stakes in global companies, power plants, airports, energy networks, entire industries quietly supported by insurance capital, all built from something most people never think twice about: an insurance payment. One investor understood exactly how powerful this system could be: Warren Buffett. While most people saw insurance as a business that paid claims, Buffett saw something much more valuable: a constant stream of cash flowing into the system every year. Money that could be invested. So he began buying insurance companies, one after another, using them to build a permanent pool of investment capital inside Berkshire Hathaway. Insurance payments kept flowing in every year. while claims were often paid years later. That meant Buffett had access to enormous sums of money that could stay invested for decades. Capital he used to buy railroads, energy companies, banks, and major global businesses. Over time, that insurance capital helped turn Berkshire Hathaway into one of the largest investment empires in the world. All built from something surprisingly ordinary: insurance premiums paid every month by people like you and me. And yet, most people never notice this system at all. Because insurance doesn't feel like an investment. It feels like a bill. Something you pay every month and move on from. $100 here, $200 there. Small payments that barely register. They don't feel like capital. They don't feel like investments. They feel like protection. Something you hope you'll never actually need. But when millions of people make those same payments, month after month, year after year, those small payments quietly build enormous pools of money. Feeding the same investment machine, a machine most policyholders never see, never question, and rarely think about, even though they are helping fund it every single month. Insurance was designed to protect people, to help when something goes wrong, a crash, a storm, a medical emergency. And for millions of families, it does exactly that. But at the same time, those same payments are doing something else, quietly feeding one of the largest investment systems in the financial world. Money flowing into portfolios, into markets, into enormous pools of capital. Two realities existing at the same time: protection when disaster strikes, and a financial engine worth trillions running in the background. The next time you pay for insurance, remember where that money goes. It does not just sit in a vault. It joins millions of other payments, flowing into the same investment machine, turning ordinary dollars into billions, just not for you.